Hey guys, Joseph Henson here with Henson CPA Group. I hope you have had a good day and a good week. We're going into week 3 of our series over selling your clinic, making sure it's in the right area, and what you need to do. This week, we're going to go over building a veterinary clinic buyers want. What actually makes a veterinary clinic valuable to buyers? Again, I'm Joseph Henson, CPA with Henson CPA Group. If you want to get a hold of me, you can use the link below to book a free call, and we can go from there. But let's go ahead and get started so you guys can have the rest of your evening to yourself. Revenue isn't the whole story. High revenue alone doesn't automatically create value. Buyers don't just buy revenue, they buy predictability. What does that mean though? They want to see that over time, they can expect growth. They can expect that the bottom line doesn't change consistently and constantly without it being expected. They want to feel good about what they're buying. They don't want to go in and see year over year fluctuation for EBITDA, earnings before interest, tax, depreciation, amortization. They want a predictable return on the money they invest. Profitability matters more than owners think. Buyers often focus heavily on your margins, your profitability consistency, and the operational efficiency. Consistency is often more attractive than occasional spikes. If you're every year your EBITDA is $100,000 and then one year you hit $400,000, that's an off year. That's a fluke. What did you do to change that? They don't care. They want to know that every year you can do $150,000, $200,000 in EBITDA, and that's consistent year over year. They're going to expect that return. Your margins look good, your profitability is consistent, and you have great operational efficiency where anyone can plug and play. Buyers love predictability. It reduces their perceived risk, and they will usually pay for that confidence. You don't have to have the best EBITDA, but you do have to have a predictable EBITDA year over year. That's why I've said before, truly 3 to 5 years to get a clinic that has never focused on EBITDA, never focused on growth, never focused on the bottom line, to get them to a spot that makes sense for a buyer. The associate doctor stability matters. Buyers often evaluate the associate retention. How long are your associate DVMs staying? The staffing consistency. What is your staffing turnover? And the operational dependency. How dependent is the clinic on, one, you as a veterinarian, or two, a key performer in the clinic? Do you have a phenomenal COO, a chief operational officer? How dependent are you on that position? Can that person in that position go away and still maintain a high level of sustainability and dependability and predictability? If you see a lot of turnover with your associate DVMs, that's going to lead to questions over why. What is driving them to leave? Are you not paying market rates? Are you not focusing on retention? Do they have a better offer somewhere else? What are the benefits they're currently being offered? It goes for staffing consistency as well. Those are things that buyers want to know. Systems increase the value. If you have a binder, and I'm going old school, binder, it can be whatever you have, but a well-documented system, it will create a smoother operation, easier transitions, and lower perceived risk. When your day is laid out from A to Z, 1 to 20 on here's how we're doing this. At the beginning of every day, our technicians are coming in, they're prepping, they know we have surgery, they're getting all the surgery stuff set up for everything we need. They have the calls going out between 9 and 10 a.m. We know that on the third Thursday of every month, we are reordering supplies because that's typically when we're getting low. This is what buyers want to see. They know that you know how to run a clinic, and hopefully they can improve upon that without having to overhaul everything. That is going to change your EBITDA multiple, even if it's 1 or 2. If you go from a 10 to an 11 or an 11 to a 12, that is a huge difference. That can be hundreds of thousands of dollars just by documenting the systems you are in place to truly drive growth and continuous progression. Owner dependency lowers the value. The more dependent the clinic is on one owner, the harder the transition becomes. So if you are the person creating 60, 70% of the revenue for your clinic, that is a huge risk. Buyers want a business, not just a job attached to one person. Your job as a veterinary clinic owner is to truly work yourself out of having to do daily work. When it comes to what is being generated revenue wise, if you are in there doing 20% of the generated revenue, great. They can replace that. You are less of a risk. It's not just a job that has someone getting an extra paycheck. This is truly a system that is plug and play. Financial visibility increases the confidence. Buyers want visibility into the reporting, the trends, the payroll, the profitability, and the financial consistency. With reporting, they want to be able to see month over month where you are at. What is the trend? Are you trending up or are you trending down? Your payroll. Are your payroll expenses going up in conjunction with the increase in revenue? Or have you just been sinking more and more money into payroll, causing folks to just stay there? The profitability, they want to have profitability. That's the thing they're buying, is a profitable clinic. If you're losing money year over year, you are not going to sell very easily. And then financial consistency, like I've already mentioned. Is your clinic consistent with what is happening? Is your cash flow positive? Can they put a few things in place to continue making you in your clinic more money, or are you just going to be a money sink? What owners often miss, though, there are small operational and financial improvements that can significantly impact attractiveness of your clinic. Many owners assume the value changes only come from huge growth. That's not true. It's often from better systems, a cleaner reporting, stronger staffing stability, operational consistency, and these are all things that can make a major difference. With better systems, they know you're dependable. With cleaner reporting, they can trust the numbers where they're being presented. That can mean, like I said before, using the AHA chart of accounts, breaking out different things. What is the owner compensation? How much of the health insurance is going towards a 2% or more shareholder? Stronger staffing stability. You don't want turnover every 2 to 3 months. You want long-term employees who are rewarded and who enjoy doing what they do. These are all things that you can do today that in 2 to 3 years make a huge difference and will change what EBITDA multiple you actually get down the line. Building value starts before selling. The strongest exits are usually built over time. The goal isn't just a future sale, it's building a stronger business now. We want a strong exit to make sure you get top dollar for what you've built. You've spent 20 years on this, 30 years on this. You've put blood, sweat, and tears. You've missed out on things with your kids, your grandkids. What you truly want, though, is to make sure you make as much money from selling your clinic and knowing they're going to continue serving your community at the level of care you did for the long term. We don't care about the future sale. We want to generate revenue now, kick off some of that revenue now as well to you as the shareholder to make sure you're being rewarded. This helps you today and tomorrow. So next week, we're going to evaluate a veterinary clinic offer without regret. This will go through an asset sale versus a stock sale. What are the tax implications? How do the earnouts really impact you? What is seller financing and how do you make sure that works for you? And then a typical transition period, how long you're expected to be in the clinic versus out of the clinic. I know we've had 3 weeks and we have another one after this. So we want to go make sure you get the answers you need today. These are always available on my Facebook page and YouTube page. But if you have a veterinary exit readiness review that you want to go through, this is one of the things we can help with. We'll go through the financial organization, the operational dependency, and the profitability visibility, and overall buyer readiness. You can reach me at the link below or email me at joseph@hensonCPAgroup.com. But until then, guys, I hope you have a great night and thank you for joining me.